Hey traders, Nick here. Wanted to recap the week early because I have some things to do and I don't think I'll be able to recap it closer to the close. We have a few hours to go. The day is green, about up 1% on one index, and then let's call it up 0.7%. I think the small caps are lagging. Nevertheless, it was a scary outcome. Could have been a scary outcome for the bulls, but they eked it out. So this is the S&P E-mini, so basically the SPX. We had two scenarios: fall apart in 3 steps or break out from this downtrend, and today we are. However, this should be some sort of a resistance. Now, having said that, the week was potentially filled with drama, but it's boring weekly candles after all the drama that drummed up. Basically, rates are not going anywhere. Let me see if I can get you a visual to that. All right, yeah, I can do that. All right, so here we go. This is the S&P. This candle, as of like about an hour ago, is a doji almost green for the week. So let's call it flattish green for the week. This is the NASDAQ, this close to all-time high, small dip, it doesn't matter. Same comment here for the, whoops, you can't see it. Trust me, the IWM looks about the same as this one. And the IWM and the small caps and the NASDAQ left tails, which are leaving tails. I don't know how they're going to close, but they're leaving tails. And that's somewhat bullish because it means that they tested the low and they rejected it. They're closing towards the high. The Dow, even better than the S&P. The XLF, they had a great day today in the morning. Some of them are giving it back a little bit. The XLI is in danger. You can't see this. Sorry about that. And FANG, same comment as they averted a breakdown here, a short-term breakdown, but they're still so close to all-time high, so it's not really a breakdown. Bonds, so this tells me that if the bonds break out, then the rates are not going anytime soon. So fear had an opportunity. Gosh, I wish I can show you that one. Let's see here, small screen. Okay, this is fear. They had an opportunity. I'll share a different in the write-up, the different charts that show it better. They had an opportunity. The bears had an opportunity to put away the bulls, or at least a lot more hurt, but they failed, and that was yesterday. Doesn't mean that they won't do it next week, which brings me to next week. Next week we have drama. First of all, it's a short week in the U.S. Those by themselves are drama-filled usually. So I avoid selling premium into that week. So then the events are big time. First of all, we have the non-farm payroll jobs towards the end of the week. I think ADP gives us a peak Wednesday usually, maybe on Thursday on a short week. I can't remember. Nevertheless, so everybody's going to be looking at that. Why? Because they want to see what rates are going to do. Because as soon as they see a hot jobs number, if there's wage inflation, they start saying, oh my gosh, the Fed's going to do this or that. So I don't think rates are going anywhere soon. In fact, this is a bearish pattern. TLT, which is the opposite of rates, is a bullish pattern. Any break of this line can send the bonds soaring, which is bad for stocks, because if you think about it, bonds are an alternative to stocks, but we're not committed, meaning sometimes we rally with bonds and other times we rally against bonds, because if we're afraid of higher rates, we rally with bonds, and which is unusual, but it happens. So I can't tell you how this is going to affect stocks, but I can tell you that the bond market is way bigger than the stock market, and it will move it. So how we choose to react with it, I don't know. My opinion is this would be bad for stocks, but remains to be seen. The dollar eased up a little bit. So that also comes into currency is obviously a huge market as well. So next week, drama-filled potentially. Jobs report, that's point number one. But bigger than the jobs report, we have the tariffs. We are afraid of the tariff war. And I believe next week is when we have to start saying, okay, we have to implement some tariffs that we said we were going to do. So if they implement them harshly, meaning as bad or worse than they promised, then if they implement them in a mild version of it or decide to kick the can, that could be some relief pop. So basically it presents a couple of scenarios for me, in my opinion. So the price action has been tight, higher lows, lower highs coming to a point. So we either see like 275, 275 and a half in the SPY, or we see a breach of this week's low. So take your bets. It's a binary outcome. I can't give you intelligence. I can look in the options market and tell you what everybody expects. And in my opinion, if I interpret it, There's room to do either, but there's some upside bias, very small upside bias. So the options market are more expecting upside than downside, but not overwhelmingly so. So it's a binary bet. Some people like to buy a straddle, meaning they buy both bets. They buy one call, one put exactly at where it is right now and hope for a big move. Then they get paid. I don't like to do those. I would make the decision based on my portfolio. If I'm overwhelmingly long, then I should buy some puts. It doubles as protection and a lottery. When they have several expirations, one on the 2nd, so barely a couple of days, one on the 3rd, and one on the 6th. So you can choose it. I'd like to go to the 6th or beyond, especially if it's a spread, then it costs about the same. So give yourself more time. So next week, drama-filled potentially, and we should see one of two outcomes, bing or bang. So, weight your portfolio accordingly so not to be blindsided. I will have several trade ideas that I will share, and then we can go from there. If you have any questions, you can let me know. So basically, this week could have been a lot uglier than it turned out, but the next week could be the actual continuation of this week. So far, the bulls are still in control, believe it. It's hard to say. I am convinced that all the selling is not real bears, because if it were, they'd be pressing the short and they wouldn't let this opportunity go by. So instead, it's bulls booking profits. And let me show you fear, right? So this was fear, and that's the opportunity that they left on the table, the bears. And the green candle is hiding the fact that they breached it. So I said the other day on the closing 2 days ago, if they close, because I recapped early. So let me see if I go down to maybe a couple of 4 hours. Okay, you don't see it. Yeah, you can almost see it. But anyway, there it is. See, the candle was above. So they were there, and then they decided to let it go. So now they have to hold this. So next week, when I said the SPY had up or down, this would be down or up. So either it goes back down to this level here, or it rockets higher, and then that would bring a big drop in the market. Well, relative big drop in the market. Now, Google, Apple, and all that had greens, and I haven't checked lately. So, it's still up, but a lot less up than it was in the morning. So, balance is great. This week could have been terrible. It didn't turn out to be so terrible. So, we shall see next week. I personally, again, I stress I don't sell spreads or premiums into a short week, because I'd rather have time on the clock. If something goes bad on a short week, it's hard to fix the trade or roll out of it or defend it in any way, and then you end up getting blown out pretty quickly. So why not go a little bit out in time? The dollar, last thing, let's go on a daily candle to show. It traced out our breakout almost exactly, and today is a big dip, but dips have been bought in the dollar just because we're in a tightening cycle, and they, as in every other central bank, major central bank, is not. All right, Nick signing out. If you have any questions, let me know.